FCM Mortgage, First Community Mortgage here in Chicago, and we're going to talk about different mortgage types and what product might be right for you. Okay. Now, the first thing I'm curious about are FHA loans. Can you tell me exactly how those work for people?
Hi, Tom. Good morning to everybody. Yes, love to go over these products with you. FHA loans are really great options because they offer 3.5% down, which means you just have to put down 3.5% of the purchase price to purchase the property. And that includes a 1 unit property up to a 4 unit property. So these
Okay.
loans really beneficial. If you want to buy a 4 unit building, you only need 3.5% down. That is the huge advantage. You don't have to have 20% down to buy a 4 unit building. It's just 3.5% down. So everybody loves FHA loans because of that.
Oh, I agree, and I think everybody's first building should be an apartment building, but I'm weird. You know, but the thing is, I think it's great for everybody. Now, how does an FHA loan work different than a VA loan?
A VA loan is only for veterans or for maybe the surviving spouse of a veteran. But
Okay,
loans are 100% financing, which means you need no down payment. It's 0% down payment. I love working with VA loans because it's a great benefit to the veterans after having served. They get this home buying benefit, and a lot of them don't know about it. So I do a lot of seminars on putting that information out there. So, short of using a VA loan with zero down payment, FHA is another great option with only the 3.5% down.
well, I think there's another thing about VA loans I found really tremendous, especially here in Illinois. If you're a veteran, you will not pay property taxes.
Yes, if you have a disability, yes, you will not have to pay property taxes. You have to file that yourself. That's not
Mhm.
something the lender or you as a broker can help with, but the veteran would need to file for that property tax exemption by themselves.
Okay,
Mhm.
after the property would close.
Correct. Yep.
Okay.
Yep.
Well, interesting. Now, generally, what are the rates for FHA and for VA loans? Are they higher than conventional?
No, they're just about on par. And of course, interest rates are dependent on your credit score. Rates right now are in the sevens, it seems like across the board. They fluctuate to the high sixes, to the mid sevens every day, depending on where things are. But they're just on par with every other loan product, I would say.
Okay. So now I know for PMI would still apply for a VA loan.
Yes, well, actually, for veterans, no, there is no MI. So that's another great benefit. For FHA, there's two different types of MI. There is upfront mortgage insurance that you have to pay. So
Yes.
that's like part of your closing costs. And then there's mortgage insurance that's built in for the life of the loan. With conventional lending, you only have MI if you have less than 20% equity in the property, you have mortgage insurance. Once you hit that 20% factor, the mortgage insurance will drop off.
Okay. And
So
not
that
for FHA. FHA it stays forever.
yes, that's one of the benefits. When you do the 3.5% down, it's that flip thing where you have the great down payment option, but then you will have that mortgage insurance for the life of the loan. You could always refinance out of an FHA loan, of course, to conventional. But yes, that is how FHA helps finance this product that they have.
Okay. So
Mhm.
basically, it helps keep the system solvent with this extra
Yes,
PMI.
yes.
Okay.
So down payment it's interesting because for conventional loans, you have an option of 3% for a first time home buyer. And a first time
Yes.
home buyer could be somebody that maybe bought a property a few years ago. And they could just do a 3% down. Typically, it's a 5% down payment for buyers that are going conventional. But again, there's a relationship with the down payment amount and the amount of mortgage insurance that you're going to be paying. The higher the down payment, the less the mortgage insurance will be.
Interesting, of course. Now, there's one gentleman asked me last week, and he was curious. No, what is the difference between an ARR and an adjustable rate mortgage or in a regular mortgage? And what are the
Um,
benefits of both? Is it worth getting an adjustable rate mortgage?
well, adjustable rate is exactly how it sounds. Your rate will adjust up or down depending on the market. So you kind of have to look really carefully at what's going on. Yes, interest rates are a little bit higher now than they used to be during the pandemic. Um,
Yes.
but you want to make sure that you're thinking toward like long term. Do you want to lock in a rate now at say 7%, or do you want to take a chance and have an adjustable, which means that it can go up or down depending on the type of adjustable mortgage rate you get? One really important thing to keep in mind is that if you do lock in a rate now, say it in the high sixes, you can always refinance when rates go down.
Okay.
People
And the
forget
same
that.
rules apply. So basically, if rates fall 1%, it's worth refinancing, or is it even less than that? Would it be worth refinancing at a 0.5%?
Half a percent doesn't make much difference in your monthly mortgage payment, nor does even 1%, truly. It
Okay.
for In my opinion, it would be much better to wait for a little bit more of a significant drop. If you go from 7 to 6.5, not a big deal, or even 7 to 6, not a great big deal either. And that's why you shouldn't get too freaked out either about locking in a rate now, because the difference between those two, 6 and 7, is not huge toward your monthly payment. And if you need to buy, regardless of the rates, you need to buy. So you can always lock in, you know, and then when rates come down, just refinance out of it.
Well, yes, I noticed the market is still extremely tight. It's still a seller's market. It's really surprising just how there's just no inventory on the market even now. The market inventory has increased a little bit, but I haven't seen it. I think so many people are locked in at 3.5%, and just they just can't afford to move, like
Right,
me included.
right.
Yeah, it's okay. So you're selling. There's so many other issues. Like I was curious, what have you ever done any USDA mortgages?
I I have not, I have the ability to do it, but the clients that I'm working with are not buying in rural areas. So
Okay,
that is not something that I do. I we're in a very high urban area here in Chicago, and yes, I can lend in just about every state, but even my lenders in other states are not in these USDA designated areas.
okay, I see. Well, that's really interesting. Now, I hope we've covered all the different types of mortgages. It's really an interesting state. They always have new products all the time, and that's just a matter of talking to your professional and seeing what works for you. I know for a lot of people out there, they're sitting on the sidelines because they're worried about the price affordability, and they're waiting for prices to drop. I don't think they're going to drop. I've been waiting myself for well over a year for things start to get a little softer. And
Mhm.
honestly, in the communities that I serve, things have held up and very strong, and we still have a really good housing market. People are still moving to Chicago. You know, everybody says everybody's leaving Illinois, but they're not leaving Chicago. Okay. Uh,
Right.
okay. Now, did I cover? We talked about eligibility for a loan, and we always talked about how important credit score is. But is there anything else that you tell people to make sure they do, especially if the next few weeks are thinking about getting a mortgage? And of course, you should always look at your credit score and figure out what you need to do to make it to improve that. But is there anything else that you would tell potential home buyers?
Yes, I would say really reach out to a lender to get a pre-approval, not a pre-qualification, get a pre-approval. So that means that a lender will look at your whole situation, all of your monthly debts as well. Look at your credit score and see if there are ways to improve it so you can get a better rate. But also, if you're carrying so much debt, you may be counseled to pay down some of that debt so you have a little bit more purchasing power too.
Oh,
So really,
absolutely. Yeah.
yeah, everybody's situation is so different. I say just speak to a lender and just kind of get a good overview of your situation so you can be advised properly.
Karen, thank you for your time. And I want to encourage everyone out there to scan the little barcode right above me here, my head, and we'll send you a PDF on all different types of mortgages you can get. And also, you'll have Karen's contact information if you want to reach out, and she can certainly counsel you on what you need to do next to buy a home. Um, it's an interesting market. It's very tight, but people are moving all the time, and don't let that stop you. Life keeps going on. Okay. Yes. You were going to
I was
say
going to
something,
say,
Karen?
yeah, one last thing. Life does keep moving on, and
Yes.
um, in your situation, perhaps if you are currently renting, your rent might be going up, and it's kind of like, you know, you're going to be paying somebody's mortgage, whether it's yours or somebody else's, like your landlord. So always
Very
kind of
true.
start thinking about that possibility of purchasing your own.
Even in your own, your own condo. If you wanted to buy a 2 bedroom, you'd be in much better shape in so many ways in the long term. Right
Right,
now, no. I mean, there's
right.
still proof that you could rent for less than you're buying right now, depending on the neighborhood.
Hmm.
But you know, buying a home has always been a good idea, and I still believe that to be the case today.
Hmm.
Karen, thank you for your time and taking the
Thanks,
time
Ben.
to waste your Monday morning with me. Everybody, thank you for watching us. Take care. Have a nice day. All right.
Bye.